Hello everyone, welcome back to my YouTube channel. In the last class, we learned about dishonor of a bill, right? So in today's class, we are going to learn about a renewal of the bill. So this concept is also a very important topic in bills of exchange. So let's see what is a renewal of a bill. Sometimes drawee is not able to pay the bill on the due date. Drawee means who pays the bill amount. He is not able to pay the bill amount on the due date. Clear? So then drawee means who makes the payment. He requests the drawer. Drawer means who makes the bill or seller of the goods to cancel the old bill. Sometimes what happens, drawee is not able to pay the bill amount on the due date. So he requests the drawer to cancel the old bill. Now and draw a new bill for an extended period. Means he is going to pay the amount but he is not able to pay the bill amount on the due date. So he requests the drawer to cancel this old bill and draw a new bill for an extended period. Clear? So this process is called as a renewal of a bill. So when drawee is not able to pay the amount on the due date and he requests the drawer to cancel the old bill and draw a new bill for an extended period, that is called as a renewal of a bill. Clear? Right? So in dishonor, the drawee, he does not pay the bill on the due date, right? But in renewal, drawee requests extra time to pay and the drawer agrees to cancel the old bill and make a new bill, right? That is what renewal of a bill. And what are the key points in renewal of the bill? So old bill is get cancelled, right? And new bill is drawn for the extended time. New bill is drawn for the extended time. Means the due date is October 4th, suppose, and on October 4th he is not able to pay the bill amount. Then he requests the drawer to cancel the old bill and draw a new bill for an after 2 months, means November, December. And means on December 4th he has to pay the bill amount. Clear? So here sometimes the drawer may charge interest for the extra time given. So here when the drawee he does not pay the amount on the due date, then drawer what he will do, he may charge interest for that extra time. Clear? So that interest, it may be paid in cash or added to the new bill amount. So immediately drawee he can pay the interest amount directly in cash, or suppose the bill amount is 10,000, interest is 500, means he may paid in cash directly, that is amount of rupees 500, or added to the new bill amount, means rupees 10,500, that is the bill amount, means interest is included in the bill amount. This is his wish. Clear? He may be paid in cash or added to the new bill amount. So let's see the example. Rohan sold goods to Suresh worth rupees 10,000. So Rohan drew a 3-month bill. Suresh accepted the bill. Right? Here drawee is Suresh and Rohan is the drawer. And on the due date, Suresh says he cannot pay. Then what happens? He requests me, Suresh requests Rohan to renew the bill for another 3 months. So Rohan agrees and extended the time period for the payment of the bill. But Rohan, what he will do? He charges interest for 3 months. That is rupees 500. Now Suresh pays the interest in cash. Means Suresh, he will immediately pay the amount in cash. That is rupees 500. And new bill is drawn for only for rupees 10,000. If he has not paid in cash, then this 500 rupees, that is included in the new bill amount, that is amount of rupees 10,500. Clear? So I hope this example is clear to you all. Now let's see the journal entries. How to pass the journal entries under renewal of a bill. So here first what we have to do, here the drawee is not he does not pay the amount on the due date. So he requests the drawer to cancel the old bill. So now what is the journal entry for cancellation of the old bill? This is same as dishonor. In dishonor also we will cancel the old bill, right? So what is the journal entry in the books of drawer? Drawee's account debtor to bills receivable account. Means drawee again owes money. Means his account increases. Debit increase in asset. What is the rule? Debit increase in asset. So debit drawee's account. So in our example, drawee is Suresh. Rohan sold goods to Suresh, right? So Suresh account debtor to bills receivable means it is an asset. Bills receivable, it is an asset. So the bill is cancelled means what? Asset decreases. So credit decrease in asset. So this is the rule. Clear? So for cancellation of the old bill, the journal entry in the books of drawer is drawee's account debtor to bills receivable account. Now in the books of drawee. In the books of drawee, what is the journal entry? Bills payable account debtor to drawer's account. Bills payable account debtor to drawer's account. Here bills payable, it is a liability. This is in the books of drawee. Clear? Bills payable, it is a liability. Bill is cancelled. It means what? Liability decreases. What is the rule? Debit decrease in liability to drawer's account. Drawer's account increases. Means Rohan's account in our example, because he again becomes a creditor. Means credit the giver. He is the giver of the benefit. Because why he is again becomes a creditor? Because the old bill is getting cancelled. Right? So cancellation of the old bill, what it is same as dishonor. Clear? In the books of drawer, drawee's account debtor to bills receivable account, and in the books of drawee, bills payable account debtor to drawer's account. So I hope this is clear to you all. Now next entry for interest. Now if the interest that is not paid in cash means added to the new bill amount, means that is rupees, in our example 10,500 rupees. So here in the books of drawer, drawee's account debtor means Suresh account debtor. See in our example, Rohan sold goods to Suresh, and here he pay the interest along with the bill amount, means it becomes rupees 10,500. So when the interest amount that is not paid in cash, it is paid along with the bill amount. So the journal entry in the books of drawer is drawee's account debtor to interest account. Drawee's account liability increases. He has to pay more. Right? Suresh has to pay more. Bill amount plus interest. Right? So debit it and to interest account. To interest account. Interest is income. Right? So credit it. And in the books of drawee, interest account debtor means interest, it is an expense to drawee. So debit it. To drawer's account. To drawer's account. Drawer's increases means credit increase in liability. Clear? So in the books of drawee, interest account debtor to drawer's account. Clear? This is exactly just opposite of books of drawer. See here. Here drawee's account debit, but in books of drawee we need to credit the drawer's account. That's it. Clear? And here in books of drawer we need to credit interest account, but in the books of drawee interest becomes expense to drawee, so debit interest account debit. That's it. Clear? Now interest paid immediately in cash means that is not included in the bill amount. Then what is the journal entry in the books of drawer? Cash account debtor. Cash, it is an asset. Receiving the cash means increase in debit. So cash account debtor to interest. Interest is income. Credit all incomes and gains. Easy, right? And books of drawee, interest account debtor means again interest is, it is an expense to the drawee to Suresh to cash account. Cash decreases. What goes out? He is paying the interest amount. So cash goes out. Clear? Now this entry is easy, right? Interest paid immediately in cash. Now last entry for new bill received. New bill received. See here, first entry you already know because it is same as dishonor for cancellation of the old bill. And second one is also easy, means interest that is not paid in cash, means that is added to the bill amount. And third entry is interest paid in cash. Clear? And now fourth journal entry is new bill is received. New bill is received. That is bills receivable account debtor to drawees account. Bills receivable increases, means debit increase in asset. New bill received. Last journal entry is new bill received. Bills receivable. Debit increase in asset. And drawees account means Suresh account is decreases because a new bill replaces his balance. So credit decrease in assets. Clear? That's when you need to remember. And in the books of drawee, what happens? Drawer's account debtor to bills payable account. Means before accepting the new bill, the drawee owes money directly to the drawer, right? It means what? Drawer is a creditor. Before accepting the new bill, the drawee owes money to drawer. Means drawer is again becomes a creditor, right? So when the drawee accepts a new bill, he is shifting this liability from drawer's account to bills payable. When only he accepts a new bill. So the drawer's outstanding balance, means Rohan's outstanding balance must be reduced. Means decrease in liability. So debit drawer's account debtor to bills payable. Why we have to credit bills payable account? Means new bill means a new liability for the drawee. Right? Bills payable represents the amount drawee must pay on the future date. Means for him it is increase in liability, right? Credit it. The rule is debit decrease in liability and credit increase in liability. Clear? So I hope these journal entries are very clear to you all. So first one is cancellation of the old bill. Second one interest that is not paid in cash means added to the new bill. And third one is interest paid immediately in cash. And fourth one is new bill received. Clear? Bills receivable account debtor to drawees account. It is an asset, increase in asset. And drawer's account debtor to bills payable account. That is in the books of drawee. Clear? So I hope this renewal of a bill concept is clear to you all. If you have any doubts in this concept, please leave a comment. Thank you.